Welcome back to Cypher SF. Lately, the markets have been pretty crazy. We've had a lot of swings in stocks, in housing's been going crazy, the dollar, and there's a lot of things that are pretty out of the ordinary. So let's try and cover a few of them. Let's start today with the housing market. We've had prices rise, and we're not sure if they're going to fall or if they're going to keep climbing. So let's get another perspective on what's going on behind the scenes and what are some things that you might not be aware of. Let's talk about the National Association of Home Builders. For those of you that don't know, we've had a lot of shortages in material, we've had shortages in workers, and that's led to a lot of potential price increase in the selling of houses and the building of houses for sure. So here's a comparison of some shortages, some serious ones to some regular ones in different types of, I guess, materials or appliances or things that are needed in houses. Surprised? Yeah, a bit. I did not think there were going to be this many issues. I mean, in 2021, I knew there were going to be like some. I did not think lumber was going to, I guess, blow up 200% over the last year. And now this is from a few months ago, so it looks like prices may be going down, but I am not sure. Right now, everything's crazy with the supply chains and with COVID, and even like the government's not really sure of like how to handle certain things. So it's very good to be mindful of all this stuff that's happening, especially if it involves future plans of yours. So for homes, you can see the difference in shortages compared to last year, June 20 to May 2021. It's huge, 83%, 80%, 79%. Like these numbers haven't been seen in I don't know how long or if they've ever been seen. And it's just ridiculous that I guess to me, I find it ridiculous that so many people are lining up to purchase homes or to look for properties, paying well over the 20 or percent like valuation that it's at. So personally, I understand that there are people that see it as an opportunity, and it's completely fine to see it as an opportunity with interest rates so low. I agree with you. It's a great opportunity. However, if you are just squeezing through being able to purchase a property, not being mindful of potential downfalls in our economy, like with the job market or anything like that, things may not work out in your favor, or they may lead you to further struggle when it may not be necessary. So I just want to talk about a couple things that would hopefully get you to understand like who's buying houses right now, who's selling houses right now. Like, is it a good time to buy? And for me personally, I'm holding off on that for various reasons. Everyone has their own aspect on like when is a good time, or perspective, I should say. Everyone has their own perspective of when's a good time to buy for them, because their situation, my situation, other situation might be different. So to me personally, I see this: Blackrock is buying every single family house they can afford, or they can find to pay 20 to 50% above asking price. That is ridiculous. That is ridiculous. And this is in Houston. So you have these like huge investment funds looking to buy entire communities. If you look at the article, you can go to Washington Journal, or you can like just Google on CNBC, NBC, whatever, it should pop out. But BlackRock, I believe, paid 32 million. We can take a look at the article really quick. I believe it was about 32 million. Yeah. There you go, 32 million to buy an entire community. So this is huge news, because it might show where this big money is moving their funds to, because they see a potential growth or potential profit at least. I'm sure they're mitigating any potential like volatility in these markets, because we're still unsure of what may happen with the Fed and the government. Are they going to keep adding more money to our system? Are they going to stop adding and markets are going to crash? But either way, real estate is a good way to diversify. So all these people that are trying to buy homes in Houston just lost an entire community, which means there is less available, which in supply and demand generally increases the valuation, or at least what people are willing to pay for that, even if the valuation remains low, or under what it is actually going for. Because these levels to me are not normal, extremely not normal. So, like, yeah, they're nice houses, and Houston's, I mean, I haven't been to Houston, so I can't really comment on it. But if you look at the data, it's just not, personally for me, that attractive. And why I say that is, here you can check out Brant Hammer, professor underscore BTC. He has this data that he pulled up, and it kind of shows you the patterns that we've had in the cycles for homes and the pricing of them. So if we want to compare to the latest ones, which was around 2006, 2008, when we had that crash, we went bottomed out around, about 2012, and then home prices just shot back up. So if you take this as a measure move, I know we've had inflation, so I would expect this to keep moving up personally. However, if you look at the crash to comparable history events that we've had, the crash comes back like near levels where the previous level was for its low. And personally, I see it more risky to keep investing or keep buying homes at these prices, knowing that, or having a potential issue where the equity of your home might drop, which means that the value of your home might come down. So you lose value on that in the midterm. I mean, I'm not sure how long it's gonna take to recover those prices, but I would personally like to be in the positive, or at least not be so much unaware of like how far it could fall. That's what I'm worried about. So if I see this already reaching levels of previous highs and it keeps going up, where is the previous low going to be, or the next low going to be? So like you guys have seen me talk about, there's everything is cycles in housing market or real estate or in stock market and crypto market. Like every market, there's ups and downs, ups and downs. And for whatever reason, like you can kind of chart these out to a certain extent, obviously. But if you can tell, like our bottoms on average would probably range somewhere around this area. Okay. So we have these bottoms, you draw a line there in trading generally, and then it generally comes back to retest those price levels if they're sustainable or not. Nothing is exact, but as you can tell, like over the years, this isn't me just talking out of my ass. During these periods of time, how long is this chart from? So this 2020 all the way back down to, we can say, 1970. So about 50 years or so of data that you can see the ups and the downs, the ups and the downs, the ups and the downs, and now we're on the up and rising. So it's okay to buy a home. It's just something to be mindful. What I'm personally more worried about, of who's buying these homes. Like, yes, Blackrock and institutions are buying these homes, but who are these institutions? Who is Blackrock? And this is something that I found very, very, very interesting. And you guys should all keep in mind about these companies, because companies are buying property. Companies generally want profit, so they see profit in properties. However, these companies are not buying these properties to sell. They're buying these properties to rent. So in my mind, I'm thinking these guys are thinking there's going to be, I'm not sure if there's going to be a further recession or what's going to happen, but they see potential in renters, and having assets where they can, I guess, benefit from these renters, which is real estate. So you have Vanguard, which is the biggest owner of BlackRock. Then you have BlackRock with its shares, and you have all these other, I guess, institutions, you could say, that have had issues in the past with market manipulation or have done things that are not so transparent, I guess you could say. You have Bank of America. I believe they were charged also with market manipulation with JP Morgan and Chase in the UK a few years ago. You can go ahead and Google that. That was for currency. And then you have Wells Fargo, which had issues with opening extra accounts that people didn't know about. Then you have Citadel's also in here. You have other like management companies like Charles Schwab. So you have these huge Goldman Sachs and huge finance companies and money companies buying up these properties, and they don't like to lose money. So real estate might be the next big move that they're doing, or they might be trying to push people into emotionally buying at these levels. To me personally, as I see the data, I am not attracted to these levels. The interest rates are great, but I do not want to be stuck on a 30-year, I guess, commitment where my asset can have a huge devaluation in the short term after. In the short term, and within, I would say, in a few years, real estate generally moves slower than the rest of the markets, so it's not as easy to see the change right away. That's why you have to do your best to kind of see potential outcomes so you can avoid them. Like I said, if you're buying a house, this is great information to have. So if they're buying, who's selling, there's not that many sellers of properties right now. So that's another reason why property is going up. So there's a lack of material, there's a lack of workers, and property values are going up because there's not that many sellers. So when you get all that, it creates potentially a bubble. I personally think we're in a bubble. But how far the bubble can go, I am not sure. But you have companies like Blackrock buying 1 trillion, buying 32 million worth of communities and probably going to spend more. They're valued at 9 trillion. And then you have Vanguard, who is the biggest owner or shareholder of Blackrock, with 7.8 trillion. And these are huge numbers. These guys push entire markets. And the reason I'm bringing them up is because you'll see in the future some other things that they're connected to, which I'll present. And it's just so crazy how much they have their hands in right now, like all across the world. It's really crazy and ridiculous. But getting back to the housing market, I just want to let you guys know about Richard Branson. I'm not sure if you guys know Virgin, which is a space company. And the owner, Richard Branson, actually wanted to buy an island back in 1978. A 74-acre Caribbean island. I'm not sure if this is the island, but it looks amazing. And I'm sure the Caribbean islands look amazing. So I'm going to say that that's a great looking island. But it was listed for $6 million, and he decided to offer $100K. A year later, he purchased the island for $180K. And it's crazy because this quote actually stuck out to me. Everything is only worth what someone is willing to pay for it. So why I bring this up is because we have these ridiculous numbers because of lack of material or workers or lack of supply in the market right now. And these home prices, like average people are paying 20-30% over their house or potential house, and not being aware that it has a potential of coming back down. And that is very dangerous. Like, you have these huge institutions. They're not here to lose. They're here to make money and profit. So just remember, just because a house or a stock or a crypto is trading for X amount, doesn't mean it's actually worth that amount. It just meant that someone was willing to pay for it. Eventually, the market will dictate what its valuation is. So keep in mind, like, here's another home. Joe Montana had a house back in 2009 listing for $49 million, and he ended up relisting it for $24.5 million. Like, it's a nice and beautiful house, but don't let anyone tell you like what it's worth. Like, yeah, we have agencies that give you a valuation or banks, but just because they say something doesn't mean you have to purchase it at that price. So I'm sure someone told them like their home was valued at X amount this time, and someone told them their home or stock or whatever it was valued at X amount this time, and it comes back down, and someone bought it like for less. And I'm not saying that's always going to happen, but everyone's situation is different. So if you're at a point in place where you've assessed your risk, because that's all it is, it's risk management. If you've assessed your risk and you're okay with the risk that it could potentially have, or the downturn it could potentially have, then you're okay. Like, go for it. Anything I say is not financial advice, and I'm not a financial advisor. I just see these things, and to me, it makes sense. And I think common sense on certain aspects, especially once we get emotional, usually when it comes to greed, when it comes to fear, we start reacting rather than consciously acting. So this is just something to like take a look, take a step back, and be aware of for future reference. There's other data points that he brings in case you guys want to take a look at the charts. Just home prices versus like building costs over time. Obviously, it's gone up, even though right here it's gone up a bit, not compared to back in 1970 to what, maybe 1980, 1970, 1980. Home prices were huge, and then that's good because the economy is growing. But like this valuation, while like even building costs are going up, but not to this extent. You have prices shooting extremely high, and to me that doesn't make sense. I understand interest rates are low, and this may be one of the biggest driving factors, if not the biggest driving factor, of why people are buying. But these are all points that you should take into consideration before buying a home or an investment property or whatever you're looking for. So personally, I think the market is hot. I'm not going to say it's a bubble 2.0, but I personally would not buy in this under these conditions. You have a lot of data to check out. But my biggest one, or my biggest, I guess, interest is in how prices have been so inflated, and due to lack of supply, due to demand, due to fears of losing out, FOMO, So be careful on what you invest in. This is for the housing market, but just keep your investments, your mind, your risk management in mind, because it makes a huge difference building here and building here. That's a big price difference. That's about what is it, 30%, 30%ish, 33% probably price difference. So imagine you're building $100,000 house. You would have paid about $33K less if you would have waited a certain amount of time. So these are all numbers, these are all data, and this is why I say data is very important to take a look at. It is not the sole determining factor. You will be the sole determining factor of what's right for you, but just keep this in mind, So who's buying? You have these big institutions buying. You got people that seem to be willing to pay these extra 20, 30, 50% over asking price fees or prices. And who's selling? Some people are selling. There's not that many sellers in the market. Even these institutions right now, they're planning to buy these houses and just offer them for renting. And should you buy now, that's up to you. If you feel it's the right time and everything makes sense and you're okay with potential inflation, then, might not be a bad time. But be aware, stay in the loop, and I'll see you guys back in the channel next time. Oh, like and subscribe, comment if you have any questions, but please follow if you found anything useful. Thank you.